Hi everyone, it's your daily 10-minute business and finance news wrap for this Thursday, the 2nd of September 2021. Later, BHP Billiton or BHP goes ex-dividend, but first, borrowers, they are taking advantage of record low rates by refinancing their home loans at record levels. It comes as the Bureau of Statistics said housing commitments rose 0.2% in July, but while there was an increase from investors, owner-occupiers fell. For more, I spoke with EY's senior economist, Johnathan McMenamin. Johnathan, how would you describe the state of the housing market?
Yeah, the housing market's on fire, really. If you look at the impact of low interest rates, the accumulation of household savings, which is about $1.2 trillion at the moment, and the effect of a number of government incentives, it's really pushing up sort of house prices and lending finance, which we saw today.
I guess it's a little bit surprising given lockdowns, but we're also seeing refinancing reaching an all-time high. What does that say about the state of borrowers and the market?
Yeah, that's interesting. So the effect of the lockdowns probably isn't showing itself in this data just yet, because it probably reflects a lot of the loans that were taken in May and June. But the refinancing is an interesting development. Basically, they're hitting record highs because people are noticing the low interest rates that are out there for new loans. So they're looking to refinance their new loans at those low fixed rate rates.
Is there anything in today's numbers that would draw concern from the banking regulator, APRA, or the RBA?
Yeah, APRA, the RBA, and the Council of Financial Regulators will be watching these numbers. But they'll also be watching the quality of the loans that they're getting from APRA's data around sort of the loan-to-value ratios and debt-to-income ratios. I think what's quite noticeable in today's data is the strong and consistent growth that we're seeing in investor finance. You can see that since the start of October, and it's continued since then.
And a solid housing market is obviously good for the economy. It increases wealth and jobs. But what extent is it impacting housing affordability?
Yeah, that's right. So the majority of Australians do own their own home or have a mortgage on their home. So the increasing house prices is important for their wealth and their confidence. But you can see it's really having a catch-22 effect here, where equal access to the housing market is becoming an issue, and first home buyers in particular are suffering. You can see that in today's data with the average loan commitment increasing consistently and the number of first home buyers getting loans falling down.
Johnathan McMenamin there, and that home loan, the average home loan, according to the ABS and CommSec, is now $593,600. To the Australian share market now, which fell 0.6% on the 200, 7,485. BHP, a major drag, down nearly 7%. For more, I spoke with Jennings from Markets Today. Henry, the market's down today. BHP, a big contributor to that because it's gone ex-dividend. What's your take on the company at the moment?
Well, Ricardo, BHP is an interesting one. It's the big Australian, I guess, and it's now trading below where it started the year. But bear in mind, it has paid out a massive amount of dividend this year. It's paid out over $4. They made an annual profit of $17 billion US, and they paid out around 15 and a bit billion of that to investors. So it is being a little hard done by. They are transforming the company, though. This is the biggest thing to hit BHP for a long time. They've pivoted away from the oil and gas with the merger with Woodside of those assets, and they're also embracing potash and nickel, but more importantly for Australian investors, as they've collapsed that dual listed structure, which for a long time has been, I guess, a bugbear for some investors. The UK listed BHP has always traded at a big discount to the ASX traded BHP, and various reasons for that, including tax treatments, franking credits, etc. But that dislocation is happening at the moment as people will buy the cheaper one. The global investors will buy the BHP in London and sell our BHP here as the hedge against it, if you like. So that dislocation is happening, has happened to an extent. So once that clears and we get back to a more normal situation for BHP, of course, we can see through that The issue, of course, against that backdrop is the falling iron ore price, but most people hadn't factored in those $220 US a tonne iron ore prices anyway. So although the iron ore price has fallen, it's really fallen back to where people had been forecasting anyway. So not too much damage from the iron ore price as yet, and it does look as if it's trying to stabilise a little bit, but it has been a big year for BHP, that's for sure.
Reporting season is done and dusted. What did you see as the key themes, and where to from here?
Well, I guess the key theme was, is it as good as it gets? And we saw some fantastic results and some big surprises from the likes of WiseTech. Interestingly, though, with the current outbreak of the Delta variant, we did see a lot of companies not really wanting to put their guidance out there and get shot down. So I think around 40% of ASX 200 companies did not provide any guidance. And the market does like to see that. And we know that it's always been a pretty good period for companies recently as we've bounced back from the recession. So it's been an interesting period. We're going to take a little while, I think, to digest it. A lot of company meetings, a lot of fund managers now poring over the numbers. So I think it'll take a little while to settle down. But it was a pretty good result season, probably enough to support where we are. But I'm not sure it's enough to kick us higher. We'll have to wait and see. And
we had the GDP numbers come out yesterday. What are the economic numbers that the market's looking at?
Well, they were a pretty big surprise, I guess, for economists yesterday, far better than we thought. Of course, they are backward looking, and the June quarter wasn't a particularly harsh lockdown quarter, whereas the September quarter has been. So that's going to be interesting when we get to see those figures in another few months' time. I guess from an economic point of view, the RBA, which meets next week, and the US Federal Reserve, to some extent, has to balance the tapering and the withdrawal of stimulus against the COVID Delta variant growth at the moment, which we are seeing in those lockdowns. So on the one hand, you've got that slowing the economy, and on the other hand, you've got RBA and Federal Reserve chiefs trying at some stage to withdraw that stimulus slowly without anybody really noticing, I guess.
Henry Jennings there from Marcus Today.
This On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It's not personal advice, and it doesn't consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.